First of all, what are the different subjects being covered? Okay, first of all, we've got assets. My personal belief is that you can't look at anything in isolation. The whole world moves together rather than one thing just working independently. There's no way that you can look at FX and not look at commodities and such, or look at FX and fixed income or equities and not commodities. There, everything is related. We can't escape that. So rather than just teaching you one thing, we're going to give you enough of an introduction into all of them to get you up and running. In the first 2 weeks, we cover the assets, and it's a bit lighter content. It's about 1 to 2 hours on each subject. There's additional reading on each subject as well, and we want to whet your appetite into going out and finding about the different areas that you can be adding to your arsenal. Next up, we have the different types of analysis that are out there. So we've got technical analysis. I'm guessing most of you guys know technical analysis. Fundamental analysis, which is looking at the calendars and whatnot out there. We have, quantitative analysis, which is looking at taking more of a statistical approach to looking at trading. It kind of ties into technical analysis to an extent. And finally, we look at intermarket analysis. Now, intermarket is what I personally think is really interesting. It does also tie into technical analysis, but it's looking at the relationships between the different asset classes and how they can provide indicators and whatnot for your trading. Next up, we have, this is the second half actually. So at this point in between, after the subjects, we would have done our first assessment. So this is where we really ask the guys to make, as I mentioned before, just previously, put an assessment of how they've traded so far, the lessons they've learned, the mistakes they've made, the pros and cons, and then we want them to apply everything that they've learned formally into a forward-looking proposal. Then we start to make things a bit more interesting. We teach you about the discipline, the wrapping, and the structure that we expect you to take your theory into. So you can learn about how to approach the fundamental analysis or the technicals or the intermarket. But if you don't have the discipline and the structure, it's not that helpful. It is helpful, but it's very dangerous. If you don't have structure and discipline in this industry, then you're going to suffer. So we start off, first of all, with system trading. We don't take a proprietary view on any of this. So we do not encourage you to take, you have to trade the system here. You have to look at these technical tools. No. We want to just teach you about discipline, about how to structure your system, how to record it, how to make sure that you stick to your rules, and how to put in safeguards for your risk management. The same goes for portfolio management. We're not going to tell you about anything too specifically about how to do it, but we're going to teach you some tools in Excel and some tools that you can use elsewhere, which really just help you to understand your portfolio, how to optimize it. Let's say you could have 10 stocks, but you could have the weightings in them completely wrong. Everything, asset allocation is a key part of this, knowing when to move your capital around in your portfolio to get the maximum results. There are ways in which we can model this. Moving to performance analysis, this really ties into portfolio management in that it is a way of managing of risk management, in that you are looking at, because things aren't as fast moving always as in like day trading, but in portfolio management. So if you look at the performance of your different sectors, you can really delve in and understand the different areas which need to be addressed within your portfolio. Risk management, we're looking at more from a trading perspective. So we're looking at different models of risk management. So you don't risk too much on one trade, or you don't risk too little. That's actually a possibility as well. If you don't risk enough on a trade, you're not getting enough out of it. There are models out there which can give you the discipline to manage your trading. This is something which we really value very highly. It's an excellent section of the course. And to finish it off, we have psychology, because at the end of the day, there's a great story someone told me actually that the euro, one of the most influential people in Euro USD is a 32-year-old sat in London working for Deutsche Bank, and if he has a bad day, he's not going to change the market, but you can see a lot more whipsawing in the market than you might see on another day. So you have to understand that if you get up and trade and you're completely focused, you're in the right place in your mind to really get forward and get involved. this is when this is when you should be trading. If you've been out partying the night before, if you're ill, or you had a dodgy curry and you're not focused, or if you're just upset you had an argument with your girlfriend, and you're going to make irrational decisions. So you need to understand about yourself. So what we try to do is we've got Paul, who he's fantastic with market psychology. It's a big part of his PhD right now, actually. So sorry, behavioural finance. Yeah. So he's really drilling down into the cognitive biases which affect everyone and how they're going to be applied to your trading. And then we have market psychology, which kind of goes into the Warren Buffett, Mr. Market kind of territory, where understanding how other people understand the market is an important part of trading as well. I think the quote was from John Maynard Keynes: "Successful investing is anticipating the anticipation of others." This kind of goes along the lines with technical analysis. It's not like a 1-1 fit, but there are many overlaps in there. Again, this is an area which is only just starting to become prominent within trading education. It's only going to get bigger and bigger and bigger, and I think it's covered perfectly by Paul.